Ever bought a stock just because someone said it's the next big thing and then watched it crash like a bad reality show? Yeah, we've all been there. Making money in the stock market sounds exciting, but let's be real. It's confusing, noisy, and filled with hype. So here's the deal. What if I told you there's a simple system, proven over decades, that shows exactly how to spot winning stocks early, before they explode? This isn't theory. It's straight from a man who built a fortune using it. Today we're diving into How to Make Money in Stocks by William J. William, founder of Investors Business Daily and the guy behind one of the most powerful stock trading strategies ever created, Can Slim. I'll break it all down like we're just two friends figuring this stuff out over coffee. Let's start with the painful truth. Williams says most investors lose money because they follow the crowd, chase news, or buy into hype without any system. Sound familiar? He makes it super clear. The stock market rewards discipline, not emotion. People buy too late, sell too early, or worse, hold on while a stock drops 50%, hoping it'll bounce back. William, he treats the stock market like a business. Every trade has a reason. Every move has rules. So let's talk about his blueprint, the famous Can Slim system. This is the heart of the book. It's not just a weird name. Each letter stands for something, and together they point to stocks that have serious potential to skyrocket. Let's break it down. First three letters today. Other four coming up soon. C, current quarterly. Earnings. Williams says this loud and clear. Winning stocks have explosive earnings growth right now. He's not talking about some long-term potential or what might happen next year. He wants to see sales and profits booming this quarter. Look for companies growing earnings per share by 25% or more compared to the same quarter last year. Not 5%, not 10%, 25% plus. Because money flows to strength. Ask yourself, why bet on a company barely surviving when there are others growing like wildfire? A, annual earnings growth. William isn't impressed by just one hot quarter. He wants to see consistent growth. Here's the rule. Look for companies with strong annual earnings growth, 25% plus per year over the last 3 to 5 years. Think of this as checking the track record. If a company's been crushing it year after year, that's not a fluke. That's power. He studied hundreds of top-performing stocks from history, Apple, Amazon, Tesla, and almost all had this combo: big quarterly spikes and strong annual growth before their massive runs. N, new products, new highs, or new leadership. This one's gold. William found that the biggest winners usually had something new happening. Could be a new product like the iPhone, or a new CEO shaking things up, or maybe the stock itself is hitting a new high price. Why does this matter? Because the market loves innovation, and traders chase momentum. If there's a new story, new demand, or a new breakout, it attracts buyers. Lots of them. So next time you see a stock hitting new highs, don't ignore it. It might be the start of something big, not the end. Now I know what you're thinking. Okay, that sounds great, but doesn't buying at new highs feel risky? Williams' answer? Not if the fundamentals are strong. He's not telling you to throw darts. He's telling you to follow strength, because strength attracts more strength. In his words, what seems too high and risky to the majority is often just the beginning of a major move. Powerful, right? Let's keep going. Now for the second half of the system. This is where it gets even more practical. S is supply and demand. Here's a rule most people don't even think about. William teaches that stocks with fewer shares available tend to move up faster. It's basic supply and demand. If a company only has, say, 10 million shares available and demand suddenly rises, the price can explode. But if there are billions of shares floating around, the move is slower, less punch. So when you're scanning stocks, look at the share count. Tight float equals fast moves. L, leader or laggard? This one's simple. William says, only buy leaders, never buy laggards. But how do you know? Check relative strength, RS, a number from 1 to 99 that shows how strong the stock is compared to others in the market. He suggests sticking with stocks ranked 80 or higher. These are the beasts, the ones already outrunning the pack. Would you rather bet on the fastest horse or the one limping at the back? Exactly, institutional sponsorship. This is smart. Williams says, watch what the big players are doing. When mutual funds, hedge funds, or pension funds start buying a stock, that's fuel for a big move. But he adds a twist. You don't want too much institutional ownership, because if everyone already owns it, who's left to buy more? Sweet spot? A few high-quality funds starting to build a position. That's a green flag. M, market direction. Last piece, and it's a big one. Even if you pick the perfect stock, if the overall market is crashing, you'll probably lose money. William is crystal clear. You must trade with a market trend. He says before buying anything, you should know if the market is in a confirmed uptrend, a correction, or something worse. His advice? Don't fight the tide, ride it. Let's talk about the most important rule of all. Williams says this again and again, cut your losses at 7 to 8%. No questions, no emotions, no excuses. This one rule alone can save you from blowing up your account. He studied every big loss he had, and guess what? Almost all started small, but got worse because of hope. He says, hope is not a strategy, control is. Imagine this. If you lose 7%, it's easy to recover. But if you lose 50%, you need a 100% gain just to break even. So if a trade goes against you, be ruthless. Get out. Save your capital for the next winner. Now let's get a little visual. Don't worry, we'll keep it simple. William is a huge believer in technical charts, not to predict the future, but to read crowd behavior. He says most big winning stocks form similar patterns before they launch. Here are two to watch for. Cup with handle. The stock dips, forms a cup, then slightly pulls back, the handle, and then boom, breaks out. This is one of the strongest signals. Flat base. The stock moves sideways in a tight range, then suddenly pops. That base builds strength. He teaches how to recognize these early, and once you do, you'll see them everywhere. He even shows dozens of historical examples. Apple, Netflix, Nvidia, all showing these same patterns before they took off. We talked about earnings, leadership, market direction, and even why cutting losses is your superpower. But you know what separates average traders from great ones? It's the mindset. And in this part, we'll go deeper into psychology, mistakes, and how William actually found 10x stocks before they exploded. Let's be real. You can know all the strategies in the world, but if your emotions run the show, you'll crash. William is super honest about this. He says your biggest enemy isn't the market, it's you. Here's what he teaches. Don't try to be right. Try to make money. Don't fall in love with a stock. Don't argue with the market. Just listen to it. He even says most of his best trades didn't feel good at first. They felt scary, like, is this too high to buy? But the charts, the earnings, and the volume said otherwise. That's the lesson. Trust the system, not your feelings. And when a stock breaks out on volume with strong fundamentals, that's not a guess. That's a green light. William doesn't just preach, he proves. In the book, he shares dozens of actual charts from real stocks he bought. Let me give you a few examples. Apple. Back in the early 2000s, before the iPhone made it a monster, the stock was forming a cup with handle base. Earnings were surging. Institutions were buying. Boom. Williams saw the breakout and rode the wave. Qualcomm. In 1999, it exploded more than 2,000% in 1 year. Not a typo. He spotted the chart pattern, saw the fundamentals lining up, and got in before the crowd. Same goes for Tesla, Netflix, Lululemon, and tons more. Every one of these had big earnings growth, a new story or product, heavy volume breakouts from classic patterns, and William was watching, prepared, patient, then pounced. The takeaway? The market always leaves clues, if you know how to read them. William spends a whole section warning readers about what not to do. And it's brutal, but true. Here are some of the top mistakes. 1. Holding losers too long. He calls this the #1 reason people lose money. Never let a small loss turn into a disaster. 2. Buying cheap stocks hoping they'll bounce. He's very clear. Price alone tells you nothing. In fact, many of the best stocks were expensive when they started their big moves. 3. Averaging down. This one stings. If a stock is falling, don't buy more to lower your cost. That's throwing good money after bad. 4th, not having a plan. Williams says, before you buy, you should know exactly where you'll sell. Both if it goes up and if it goes down. He's not trying to scare you. He's trying to save you years of pain. And trust me, these mistakes, they're super common, but also totally avoidable once you spot them. Here's where the book gets really personal. William doesn't want you to blindly copy him. He wants you to build a system that works for you. He gives you the foundation, but he says you need to customize it. Ask yourself, how much risk can I handle? Am I better at fast trades or long-term holds? Can I watch the market daily, or do I need simpler rules? Start small. Track your trades. Write down what worked and what didn't. Over time, your system becomes your edge. And don't forget, the goal isn't to win every trade. The goal is to make more on your winners than you lose on your losers. Even Williams said his win rate wasn't always high, but when he won big. Buying is easy, but selling? That's where most traders freeze. William J. William lays it out in 3 simple rules. 1. If a stock drops 7 to 8% from your buy point, sell it. No debate. 2. If it's up 20 to 25%, take some profits, unless it's a true market leader. 3. If the market trend turns negative, step back. He reminds us, your job is to protect your capital, not impress anyone. Don't try to sell at the very top. That's greed. Aim to catch the meat of the move, the middle 70%. He even compares it to baseball. You don't need to hit home runs. Just get on base consistently. William doesn't stop with individual stocks. He teaches you how to read the entire market's mood. He says every major market move has 3 phases. 1. Accumulation phase. Smart money buys quietly after a crash. 2nd uptrend phase. Volume increases, breakouts happen, and the crowd joins in. 3rd distribution phase. Big funds start selling, but prices still seem okay. That's the trap. Your job? Identify when we're in phase 2, the sweet spot, and ride that trend until you see the volume dry up or reversal signals show up. And he tells you to study major indexes, like the NASDAQ and S&P, for clues. When they break above resistance with heavy volume, get ready. The tide might be rising. William has said, the best stocks in history leave footprints. The charts don't lie. He spent decades studying over 100 years of stock market winners. And you know what he found? Whether it was Coca-Cola in the 50s, Home Depot in the 80s, or Netflix in the 2000s, 10s, the same traits showed up again and again before those stocks took off. Strong earnings, breakouts from bases, institutional buying, market momentum. So what's the takeaway? Don't chase news headlines. Chase repeatable patterns. Williams suggests flipping through old charts. Literally, he built his fortune doing this. You'll train your eyes to spot winners, almost like muscle memory. Ask yourself, if this stock walked into a room, would I recognize its body language? That's what chart reading becomes, a visual language of market psychology. William doesn't just give theory, he teaches you how to build a routine that keeps you grounded and profitable. Here's a simple version of his daily weekly flow. Daily, check major indexes. Are we in an uptrend or not? Scan for stocks with volume breakouts and strong earnings. Review your watch list. Any setups forming? Monitor open positions. Any nearing your exit points? Weekly. Go through charts of the top 200 to 300 stocks. Look for new bases forming, cup with handle, flat base, etc. Evaluate industry strength. Which sectors are leading? This isn't hours and hours. Williams' method is about being focused, not frantic. A few minutes a day, a solid review each weekend, and you're sharper than 90% of people who rely on random tips. Williams said he stopped listening to financial TV, stock tips, and market opinions early in his career. Why? Because opinions are loud, but often wrong. He shares this golden quote, "Don't argue with the market. It doesn't care what you think." He doesn't care if someone on CNBC says a stock is undervalued. If it's dropping on heavy volume, that's a red flag. He doesn't care if your favorite YouTuber says a stock will 10x. If it doesn't have the earnings and chart strength, it's a no. The market isn't about being right. It's about making money. So what should you trust? Price, volume, patterns, proven systems. Let results speak. Leave the rest. One thing that might surprise you, William didn't believe in owning 50 stocks. In fact, he preferred just a few strong positions. Why? Because when you really understand a few high-potential stocks, you can size up confidently. He said most of his gains came from a handful of trades, not dozens. So instead of trying to own everything, try this. Build a watch list of 10 to 20 high-quality setups. Focus on 3 to 5 that show breakout potential. Be ready to act, size up on confirmation, and cut fast if wrong. Less noise, more clarity, bigger moves. Let's go into the vault now. Here are some of Williams' personal trading rules. Straight from the book. Never buy a stock under $15. Most winners started higher. Never average down. Just cut losses and move on. Avoid penny stocks. They're cheap for a reason. Always use a stop loss. Set it mentally the moment you buy. Don't trade off gut feelings. Use clear, written rules. He ran his trades like a pilot runs a checklist. No guessing, no drama. And that's what separates professionals from amateurs. William wasn't just about short-term trading. He deeply believed that the stock market is the greatest place in the world to build long-term wealth, if you learn the rules. And that's the biggest lesson of all. You don't need to trade every day. You don't need to predict recessions. You just need a system that keeps you in the game and protects you when things get wild. If you're disciplined, patient, and consistent, this stuff compounds like crazy. William turned $5,000 into millions, not by being lucky, but by sticking to these principles. You can too. Let's end this how we started. Making money in stocks isn't about being flashy, lucky, or perfect. It's about following a few proven rules with consistency. If you apply even a few lessons, like cutting losses, focusing on strong earnings, and following market trends, your trading game will change forever. And if you build your own version of Can Slim, track your trades, and stay patient, you'll look back a year from now and realize, I'm not guessing anymore. I'm trading with purpose. So our next steps? Build your watch list, read charts like stories, practice with small trades, track everything, and keep learning. You've got this. And if this video helped you, help someone else. Send it to a friend who's trying to figure out the market. They'll thank you later. Hit that like button if you got value. Comment below your biggest aha from William J. Williams' book. And don't forget to subscribe, because we've got more summaries, more trading wisdom, and more real talk coming your way. Till next time, trade smart, protect your capital, and let's build wealth the right way.